Hey guys, what's going on? Welcome to the Profitable Traders. The winning trade that you see on CADJPY is based on a simple strategy that any beginner can comprehend. This simple strategy has made me over 27 pips. And I took this trade on the 19th of October, about 10 days back, and it was profitable. This strategy is 200 EMA strategy. This strategy is so simple, and I'm going to teach you in this video. Just watch the video till the end and go and backtest this strategy on your own. Now what you do, you change your normal EMA to 200. If you use TradingView as your platform, you will have indicators here. You will have a list of your indicators here. This is the moving average exponential, and what you have to do, you change this to 200. After everything's being set, let's say you have a moving average which is like this. This is your moving average, and you have a market that is making higher highs and higher lows. Pull back to it, a higher high, a higher low, a higher high, a higher low, and this pullback does not close below this 200 EMA. Now this is your 200 EMA, and this is your market movement. Now when this market makes a pullback to this EMA but it does not close below this 200 EMA, then you look for an entry reason to enter the market to the upside. And if we have a market that is trending below the 200 EMA, what you have to do is to make sure that the pullback of this market does not close above this 200 EMA. So what you do, you look for an entry reason at these pullbacks. This pullback, look for an entry reason to the downside, look for entry reason to the downside. This how simple this strategy is, the 200 EMA strategy. Now let's come back here on the charts. We have a market that has just broken above 200 EMA. I actually took this trade on a 1 hour time frame, and I think I have a screenshot of this trade. If I have it, I will just put it at the left hand corner of the screen, and if I don't have it, I'm sorry for that. Now let's come here to the 1 hour time frame. On this 1 hour time frame, this market has broken above this EMA, made a pullback, and made an impulsive leg that closes above this previous level of structure, and now made a pullback that does not close below this 200 EMA. The wick just touched this 200 EMA, but the body of this candle is above the 200 EMA. In this case, this strategy is valid because it has not closed below the 200 EMA. What do I do here now? I will look for an entry reason to buy the market, and the entry reason to buy this market is this bullish candle. If you can see this bullish candle, this was my entry reason. There was this strong rejection here and a doji plus the bullish engulfing candle. So at this bullish engulfing candle, this is where I entered the trade. But to my advantage, the market made a pullback, and instead of entering the market at the close of this bullish candle, I entered the market somewhere here in the middle of this candle at the pullback. And before you know it, this was a win of 27 pips, 1 to 2 risk to reward ratio, and my position was filled within a few hours. And this is how it played out. And let's see if we use the same strategy on the same pair as the market moved. Now the market made a pullback. The market made a pullback here, and it has not closed below this 200 EMA. And we have this bullish candle. This would have been a loss. But let's see here when the market breaks below this 200 EMA. Now this market has broken below this 200 EMA, made a pullback to it. After it made this pullback to it, what do we have? We have this bearish candle. This bearish candle, this is where I would have entered the trade. As we can see here, this could have been, let's see, the stop loss would have been a few pips above the swing high, and my take profit would have been at 1 to 2 risk to reward ratio. As you can see, this would have been a win. Now the market made this pullback, but this candle, this bearish candle, is too long, so I wouldn't take this trade. And the market is still trending below this 200 EMA with a very long red candle. I wouldn't enter that trade. Now the market came and made a pullback with a bearish engulfing candle, and at this bearish engulfing candle, if you had taken your trade, this would have been a win. As you can see, from here up to here, you have over 50 pips. You have nearly 100 pips. Let's see, you have over 100 pips if you had taken a trade here. And this is how this strategy works, guys. What you do, you look for a trending market, and if the market is trending above the 200 EMA, look for the buying opportunities, and if the market is trending below 200 EMA, look for the selling opportunities, and you make sure that at the pullback is when you enter the trade, and the pullback should not close below or above the 200 EMA. If it closes below the 200 EMA, then you do not look for any buying opportunities, and if it closes above the 200 EMA, then you do not look for any selling opportunities. But if the market makes a pullback but does not close above the 200 EMA, look for the selling opportunities. And if the market makes a pullback and does not close below the 200 EMA, look for the buying opportunities. The wick of the candle may touch the 200 EMA, but make sure the body should not close below the 200 EMA. So this is how this strategy is, and I made profits on it. As we can see from the backtesting results, here we have a market that made a pullback here, which is trending below the 200 EMA, and we have this bearish candle. At the close of this bearish candle, this is where you would have entered the trade. And let's see, your stop loss is just a few pips above the swing high, and your take profits 1 to 1.5 risk to reward ratio. And what do we have? We have a winning trade. I made a tutorial of full strategy of this 200 EMA. I will put it in the card. I will also put the link in the description below. So this strategy, just like any other strategy, there's no any strategy which is 100% accurate. It has losing streaks and it has winning streaks as well. But if your winning percentage is higher than your losing percentage, then the strategy is profitable. Or if your risk to reward ratio is so favorable, then that strategy is profitable. This trade that I took here was a confluence of different factors. It was a confluence at the key levels of structure and the 200 EMA. For these key levels of structure, I go to a higher time frame, daily time frame, where I identify my key levels of structure, and I drop to a lower time frame where I take my trades, where I enter trades. And if you want to learn about these key levels of structure, trading around key levels of structure, I've made a bunch of videos talking about support and resistance. Almost every week I talk about support and resistance in my videos. You can go and watch my previous videos and you can understand how to trade at key levels of structure. But if you are someone that likes using indicators, then just take this 200 EMA strategy, go and backtest it and try whether it will be profitable to you on different pairs. Thank you for watching this video. If you have enjoyed this video, would you give it a thumbs up, subscribe if you haven't yet subscribed, and turn on that notifications bell so that you'll be alerted whenever we upload new videos. Thank you and see you in the next video.